Okay, so that's the view on IT stocks. Now let's welcome in a global voice, Peter McGuire, who is joining us in this studio, Chief Executive Officer at XM Australia, joining us. Peter, good afternoon. Well, crude has today finally crossed $70 mark, and in fact we have seen 71 as well intraday. I don't know where is it quoting, maybe very close to 71. What do you think is really driving it up?
Well, good afternoon, and I think it's getting one-way traffic. Certainly that sell-off as far as US dollar overnight was quite dramatic, and that's really put a bit of horsepower behind crude oil, knocked WTI up to, that 66 and Brent through 71. It seems to be having a fair bit of momentum. It ran out of steam going back around about 3 or 4 trading sessions ago. I think a lot of traders were feeling as though it possibly was exhausted to the upside, and then since then we've seen that US dollar come under further pressure, and that's really causing a fair bit of upward momentum.
And what's your call on dollar now?
Well, I think there was many traders were saying, US dollar index possibly going to stay around that 90 level. Now at the moment, you'd have to say probably 88's the new handle. There's further downside pressure to what we're seeing as far as the trader's perspective. A lot of shorts, and that's driving the US dollar further lower. So that's going to be an interesting trade come over the next, say, 3 to 4 sessions. It'd be interesting to see what happens in New York tonight and, of course, Friday night.
Okay, so 88 could be the next level after it has broken 90 decisively, looks like. But, if you look at dollar's movement over a longer term, and we were looking at the chart a couple of days back, and we realized that, it is either above 90 or below 90. 90 is kind of a pivot point for dollar on the monthly or quarterly charts if you look at.
Of course.
And once we have broken above 90, we normally sustain above that level for a few years. And if there is a breakdown again, that lasts long enough. Do you see that kind of a real turn in dollar now?
Well, it really was overbought in a lot of ways. When it hit this time last year with the Trump inauguration, we were looking at that 102, 103 sort of level, and there were many traders thinking, well, what's happening? Is the Fed going to raise rates continually in 2017? That didn't materialise. We saw the Trump push forward as far as massive tax cuts, and that's really been a sell-off to the US dollar. Let's see where the Fed plays over the next matter of months if we do see continual rate rises.
They've given guidance for this calendar year that they're going to be taking almost 3 rate hikes. But let's say if the dollar continues to weaken, do you think they'll still go ahead and do it?
Well, you may see 2, but certainly the issue at hand, they can say they're going to be 3, but there doesn't seem to be a lot of traction so far. And it just depends on what happens as far as inflation, what the overall consensus is with the Dow at the way it's going. I mean, earnings are strong. Yeah. The overall picture in the US is relatively, I think, shooting the lights out and taking everyone up with it.
Actually, that's the question, right? If that indeed continues, let's work with an assumption that it does continue, and whether or not it impacts one thing is whether bonds are in a bear market or not. That's $1 million question, yes.
Yes.
But if indeed the corporate performance and the economic performance continues, is there an outside chance that Fed might actually tighten more than what they are guiding to currently over the next 18 months, let's say, not just the 12 months?
Well, that's exactly it. I think 2019 could be a very crucial point. Depends on where we see the Dow. Many traders were saying probably in the last year, will we see through 20,000? Now it's going to be, will we see through 30,000? And as I said, it's dragging everything else up. The Nifty, the Sensex, the Nikkei, everything is going very, very strongly, and it just seems to be one-way traffic. I think over the next 6 to 12 months, equities have got to be a continual uptick. But let's just see if something dramatic happens from an outlier. That's the unknown.
Could it be crude, Pradeep?
Possible. We talked a lot about currency. If you look at the crude standalone, there are enough drivers, and 10th consecutive week of depletion in inventory. That is really, what is driving crude up. And if this trend continues, crude might as well go to 80, 85. I mean, there is no limit.
Well, I tell you what, you're going to see a lot of very happy shale producers. That's the first thing. And I think more people will probably enter that market, quite simply because prices, you're retrieving it with new technologies and innovations around that $40 handle. So the uptick as far as profitability is quite dramatic. So I'm thinking that rolling across February, March and April are going to be fascinating to see if there's more production coming out of the US and what impact that's going to have leading into the June OPEC meeting in Vienna.
But the problem here is that the projections and forecasts that have come from US, they tell us that US can probably add another million barrel over next 12 to 18 months or so. It will take that long
to ramp up.
Yeah, so if you compare that with the kind of production cuts that OPEC has already put into effect, can US really compensate, at least in the short to medium term?
Well, whilst we say it could take 12 to 18 months, if profitability's there, it's going to force more people to enter the market quicker in the sense of those producers. So if they see profitability in the market sits around that $70 or $75 level, then it's going to force more players into there, and I just think that production will uptick or increase quite dramatically. It all comes down to end of profitability. If there's more profit, it's going to make more people participate.
Okay, so this inventory chart that you can actually see on our screen, and there's a clear trend how inventory is coming down and prices are actually moving up. But one last question from my side, Peter. I think in June you'll again go for that OPEC meeting, and I'm sure you'll drop by and speak to us before or after the meeting as well. Now, what is your assumption? Where would crude really be then?
I think you've probably got to say it in the current state, if that US dollar continues to be sold off, and there's no, first off, a couple of things. If there's no geopolitics, if there's no outages as far as weather or certain other conditions affecting the market, if it's a straight market, you could well see that 75 for Brent, and you may see 70 for WTI, because it seems to be in an uplift and an updraft at the moment. Hedge funds are going to play strongly into it as far as profitability also. So all of those factors need to be taken. But if you throw some wild cards in there, then I think that could really throw even more horsepower behind crude. So at the present time, I'm feeling, relatively bullish on that particular projection over the next couple of months.
Peter, there'll be a lot of ifs and buts, but which is the commodity that you'll be betting on for 2018?
I like copper, $7,000 a metric tonne, and keep an eye on gold at $1,360 plus. That's always the risk trades there, and people are very conscious of it, quite simply because our equity's too high. The contrarian view is that, maybe as US dollar comes off, there's further upside for gold. So I think those two markets are certainly ones to keep an eye on.
Thanks, Peter, for taking time out and joining us today.
Thank you.
So that's the view on commodities.